Good afternoon,
Good
everyone.
afternoon.
I, CA Gaurav Garg, welcome you all to this webinar organized by Continuing Professional Education Committee of ICAI. I also thank CA Purushottam Lal H. Khandelwal ji, Chairman CP Committee, and CA Gyan Chand Mishra ji, Vice Chairman CP Committee, for this webinar. We have amongst us our eminent speakers, CA Sachin Sinha ji and CA Bhavesh Mittal ji, for enlightening us on various issues related to filing of updated return under Section 139(8)A of Income Tax Act, and also on various amnesties announced by government under GST Act. I welcome both of you, sir. We have amongst us CA Gyan Chand Mishra, sir, Vice Chairman CP Committee. I welcome you, sir. CA Gyan Chand Mishra ji is a fellow member of Chartered Accountant and associate member of ICSI. He is a qualified concurrent auditor and also an insolvency professional. Presently, he is serving as Central Council member of ICAI for the term 2022-2025. He is also chairman of Committee on Insolvency and Bankruptcy of ICAI. He has more than 24 years of experience as an established chartered accountant. So I now invite CA Gyan Chand Mishra ji for his opening remarks.
So thank you, Gaurav Garg ji, moderator of today's program. Very respected speakers of today's program, CA Sachin Sinha ji, and of course the other speaker, CA Bhavesh Mittal ji, Secretary of the committee, CA Ajitnath Tiwari ji, and respected participants. Good afternoon to all of you. Friends, the CBE committee is dedicated for the knowledge dissemination or the concurrent topics to all the members at large. We always try to have programs on weekly basis on the topics which are very much relevant to the members, and the speakers are taken on the basis of their past experience and their valued, a practical experience what they had delivered to the profession. And today's these two speakers, I know Sachin ji and of course Bhavesh ji, they are well versed about their subjects. The topic is also very, prominent and concurrent. The first topic being to be taken by CA Sachin Sinha ji is updated returns under Section 139(8)A, challenges ahead. That is a very new topic, and I think that the members will certainly take the benefit of discussion on this issue, which is very concurrent. And the other topic to be taken by Bhavesh Mittal ji is various amenities announced under the 49th GST and way forward with other key updates. So friends, these two topics are very recent topics, and I'm sure that the deliberation of the learned speakers shall enrich your knowledge and skill. I request all the members who are attending this program, if somebody is interested to be part of any resource person as moderator, as speaker, they can kindly also share their topics and their profile to the CPE committee, because knowledge sharing is one of the things which has no limit. Anyone who has some caliber can come forward, and we assure that we will try to give them platform from CPE committee. One more program that CPE committee has undertaken last year, that is the Train the Trainers program. In that again, we are going to have the programs to the faculty who have tried to be faculty or who are faculty and they want to have more skills, more knowledge, more practical aspects, so that they could deliver at various platforms. So we'll request to the participant that if anyone is interested to become a speaker, they can kindly enroll in upcoming program of the trainers being hosted by the CPE committee. Friends, so many CPE amendments have come, and certainly it has been shared with all the members. And I'm sure that you people will keep yourself updated with the latest developments under CPE committee, and you will enrich your knowledge and skill on weekly basis with the programs held in the CPE committee. By these words, I once again welcome both the learned speakers and of course the moderator, and thankful to all of you for your valued time. And I'm once again welcoming to all the respected delegates for spending their valued time this audit bank audit season and attending this wonderful program being hosted by CP committee. I'm thankful to Ajinath Tiwari ji for his untiring effort to arrange the program, best of the speakers, and of course take the program to the last person of the profession. So thank you one and all, and enjoy this 2 hours power pack session of both the speakers. Thank you.
Thank you, sir. Thank you so much.
Thank you
sir.
very much, sir. Gaurav, just I would like to, inform to the members, like Vice Chairman sir said, so some important information related to those points. Sir, basically this year also, last year also, we had so many trainer program. This year also committee intend to organize. I think we are already initiated. So members, whosoever are here in this program, they are also requested to, whenever such announcements are take place, just to please sir join to become the trainer. We are also giving opportunity to participants of those programs to become moderator or faculty in our CP events, sir. One more information, on 15th of April, on Saturday morning 10 to 12, committee is organizing a webinar on key changes and highlights of Foreign Trade Policy 2023 and political donations, controversy and way forward. So participants who are here, they may also join that particular webinar. That is very good webinar where CA Weber Jajuji and Senior Advocate Tusharji would be there. So this is an important information from my side. Thank you, Vice Chairman, sir, and thank you, Sachinji, and to all of you, sir, for joining.
Thank you, sir.
Thank you, sir. So due to preoccupation, CA Pushottam Lal H. Khandelwal, sir, Chairman CP Committee, will not be able to join us at present. So to begin the program, as you all know, that government has introduced section 139(8)(a) for enabling the taxpayer to file updated returns subject to fulfillment of certain conditions. We have amongst us CA Sachin Sinha ji from Delhi, who will explain us about how we can file this return and what are the conditions for filing this return. CA Sachin Sinha ji is a fellow member of ICI, having of about 20 years of experience. He is partner of Prakash Sachin and Company, Chartered Accountants. He has hand experience of domestic and international taxation and management consultancy. He has developed himself in the advisory and litigation and handling other commercial issues. He is associated with Chamber of Tax Consultants. He has deliberated in around 300 seminars and webinars so far on the topic domestic and international taxation. He is also special invitee in study group of International Tax Committee of NIRC of ICAI. He is also member of study group of Direct Tax Committee and International Tax Committee of ICAI. So I now hand over the charge to CA Sachin Sinha, sir.
Thank you, Gaurav ji, for nice introduction. At the outset, I would like to thank the CPE committee for giving me this opportunity. And my heartiest thanks to our Vice Chairman, Sir Gyanchand Mishra ji, and our Chairman in absentia, Khandelwal ji, and Ajit Pandey ji, who has organized all this event and coordinated with all the members and participants. So thank you so much, sir. Now I'd like to start the deliberation and coming to that important topic. So I think the time allotted to me is approximately 50 minutes approx, if I'm not wrong. And I'd like to divide my deliberation in 20, 20, and 10 minutes. So first 20 minutes, I'd like to discuss the technical aspects of section 139(8)(a). Next 20 minutes, I'd like to discuss the issues, the core issues which are embedded in this and the solution, all the issues and solutions. And last 10 minutes, I'd like to take all the queries. So this is the flow, because I don't want to encourage the time of the next my co-speaker Bhavesh ji. So friends, the topic which is given to me is very important nowadays, because we all are filing this return that is called updated return, which is defined under section 139 under bracket 8 capital A. So it is important to understand what are the features, who can file, who cannot file, So, and what the memorandum says, how the section come into picture, whether there is any difference, and then the technical issues. So just allow me to share my presentation and then I'll take it on. Is it visible, sir? Okay. So as the name suggests, updated return, the updating of updated return, it means either you have filed the return earlier and now you want to update that information, or you have not filed the return earlier, now you want to file the information afresh. In both the situation, this is applicable. And when this was enacted by the Finance Act 2022, the memorandum which came at that time, the wording of the memorandum was very different, and it seems that any person can file who has not filed the return, or it seems that the department has opened their heart, and if the person has failed to file the return within the given or within the prescribed time of section 139, 1, 4, 5, all can file the return. Of course, the language they have kept in the similar line, but with the important changes that it seems that this is in favor of the department, not in favor of the SSC. Why so, and what are the challenges? Let's discuss. So as you all know, in the Finance Act 2022, it was introduced, and the wording was very important, that it says any person, irrespective of the fact whether such person has already filed the original, belated or revised return. So we oftenly use this term original, belated and revised return as earlier return, because it refers to section 139.1, 139.4, 139.5. So we will refer it as earlier return. So if we see up to this, it says that any person can file whether he has filed the return earlier or not. And the wording of the budget memorandum was why this has come into picture, what was the necessity to bring this section into force. So this is that on the one hand, because the idea behind it, that the timeline for filing the return is 31st July, then 31st October, and then 30th November, as per the respective SSCs. And the last date for revising the return or filing the belated return was up to 31st December. So if we see in the case of international transaction, the last date is 30th November, and to revise the return is only 1 month. So it may so happen that the SSC fails to furnish all the information and they want to update the return. And at that time, the revised return option and the belated return option all gone. So how the SSC can update? The idea was this. But if you see and how the department has modified that idea into the different position. So what they said, and in the memorandum, on the one hand, bring use data with the IT department. It means they want to get more data from the SSC. So of course, if the SSC file the return, then the department can get the data. But is it so? Whether the department has any other sources to get the data? To my mind, yes, SSC department has other sources also to get the information from their own sources. And the next part, on the other hand, it will facilitate ease of compliance to the taxpayer in a litigation-free environment. Is it so? If the SSC fails to file the return within the prescribed time of 139.1, 139.4, or 139.5, can all the SSC can file the return up to as per the provision of 139.80? So the idea was, yes, it should be, because they want to give a litigation-free environment, and the SSC can facilitate the ease of compliance to the taxpayer. But now the wording of the section is different, and it has a lot of limitation. And if you see, you can understand that it seems that it is only for the purpose of department. Only the first limb has been satisfied and the second limb has not been satisfied. So coming to the section 139.8A, who can file? So any SSC, as mentioned, any person, whether he has returned previously filed or not filed, even if he have filed income not reported correctly, they can also file. Return filed, but filed in the wrong head, they can also file. Wrong rate of tax chosen, that can also file. Reduction of unabsorbed depreciation, they want to reduce the unabsorbed depreciation, they can also file. A reduction of carried forward losses, if it is so, then they can also file, or reduction in the tax credit. So these are the points where the SSC can file the updated return. So it seems that the person who has not filed the return earlier, he can file the return, but not in all cases. Not in all cases. So we're coming to that point. And what is the timeline for filing this return? So 12 months and 24 months. Why two dates are there? So 12 months is for 12 months from where? From the end of the relevant assessment year. So if we talk about 20 to 23 assessment year, it is now over. So if SSC want to file the return for the assessment year 20 to 23, he can file the return, he can file the updated return up to 31st March 2024 in the first instance, that is 12 months. Assuming he missed that bus also, the government has given a more extended time, that is 24 months. But why two dates? Of course, we'll discuss it later. As I mentioned, they have opened their heart by saying that any person can file who has failed to file the return or filed but want to revise or want to file updated return, they can all file, but with restrictions. What are the restrictions? It should not be, updated return cannot be filed if such updated return is a return of loss. If it is a return of loss, you cannot file. If it is not a loss, but you want to reduce the tax liability, it means you have filed the return earlier. Now you want to reduce the tax. Now you want to update that return, but with the reduced tax liability, it is not possible. And the third is, you cannot increase the refund. It means earlier you have filed the return with the X amount of refund. Now you want to update the refund with X plus amount of refund. It says no, it is not possible. So it seems that it is only if there is an income return, you cannot claim the refund, or you cannot increase the loss. So in the first instance, this is the first and general restriction. These three are important. Then come to the specific instruction, the specific restriction. If any search proceeding has been initiated, so search, survey, seizure, any proceeding has been initiated under section 132, 132 capital A, or 133, or 133A capital A, or 133 under bracket 2 capital A. If anything is, if any search, survey, seizure has been initiated in these sections, then you cannot file updated return. So logic is, if assuming if this is initiated and now you want to update the return from the back date, then you can say that I have already informed, I have already furnished the detail to the department. So they say no, you cannot opt for this. So this is a special restriction. First is a general restriction, second is a special restriction. There are further special restrictions also. Apart from search, seizure, survey, there are other restrictions like updated return can be filed only once for a particular year. Assuming for the year 20 to 23, if you file the updated return, you cannot revise it, or you cannot file updated return again for that particular year. Second, any proceeding or for assessment, reassessment, it means notice has been served to you. Now the question arises whether 148 notice has to be served to the SSC, or 148 capital A under bracket B notice has been given to the SSC. So this is a part of proceeding. So it can be said that yes, 148 capital A under bracket B notice has been issued to the SSC. Then in that case also, the proceeding has been initiated, and in that case, the SSC cannot file updated return. The language is the pending. The matter is pending. So when it can be said it is pending. So when it is started, it is pending till the end of the till the conclusion of that particular assessment proceeding. Any information which is received by the department from under section 90 or 90 capital A, then in that case, and the department has intimated to you that, see, we have this information against you, then in that case, you cannot file updated return. Similarly, any prosecution proceeding has been initiated, in that case also, you cannot file updated return. And these are four major categories, and other is if the board notify some other categories in that case. So the fifth one. So general restriction, the special restriction, then ultra special restriction. In this case, absolutely no. You cannot file updated return. So when your matter is in the Smugglers and Foreign Exchange Manipulators Act, when your matter is with the Prohibition of Benami Property Transaction Act, when your matter is with the Prevention of Money Laundering Act or Black Money Act, if the notice or if the communication has been made to the SSC, the SSC cannot file the updated return after that communication, after the date of that communication. Once the communication, before that communication, since even though the information is with the department, but it is not communicated to the SSC is free to file updated return for that year. But if the communication has been made to the SSC cannot file the return for updated return for that particular year. Now the question arises, because every time this is section 139.1, 139.4, 139.5. So what about 139.3? So they said you can file if you miss to file the original return, revised return or belated return, or if you file but you want to update it. So this is one situation. What about the 139.3 return? So the proviso clause specifically says if the SSC has opted for 139.3, he can furnish an updated return. He can furnish an updated return. However, such updated return should be a return of income. It means if the SSC has filed the return under section 139.1 and the SSC wants to decrease the loss, assuming earlier he has filed a return of 20 crore loss. Now he wants to decrease that loss to the 15 crore. Can he file it? So if we go to the proviso clause, it says, however, such an updated return should be a return of income. It means if there's something which is called income, but if you refer to the first clause, it said is a return of loss or result in the lower tax liability determined in the tax return. So lower tax liability. Assuming earlier there was no tax liability, and after increasing of this loss, decreasing of this loss, there is no tax liability yet. Then whether in that case, if SSC has filed the original return under section 139.3, whether he need to declare the income in the return in section 139.3 return, then only he can opt for 139.8A. To my mind, no, but the proviso clause specifically says where the person has furnished a return of loss under 139.3, he can furnish a updated return, because the first clause, the main section says the SSC can file the return, but he cannot increase the refund, or so if he is not increasing the refund, but he is not at the same time, he is not converting that, he is not declaring, or he's not reducing the loss, he's increasing the he's not increasing the loss, he's reducing the loss. So in that case, to my mind, he should be eligible to file, but if you go with the proviso clause, he is not eligible to file this. Coming to the next clause, subsequent year updated return. So first year, of course, you can update the return as we discussed, but assuming in the earlier year you have claimed the loss, you have carry forwarded the loss, the business loss, or carry forwarded the unabsorbed depreciation, or there is any tax credit which you have carry forwarded to the subsequent year in the original return or in the revised return or belated return, but now you want to update the return. So whatever you have done in that year, that is you are updating the return, but of course that has a counter effect in the subsequent year also. So while updating the year one return, you need to update the subsequent year return also, so that the loss or the unabsorbed depreciation or the credit should be taken care accordingly. Come to the computation part. So 140 capital B deals with the computation part, and I'll not go into the line by line interpretation of the section. So making the long story short, any tax what you have paid earlier, either it's advance tax or any TDS credit or any sort of credit which is available to you at the time of filing of original return or belated return or revised return, that would be available to you at the time of filing of return under section 139(8)(a). Now the question arises, assuming the relief was available under section 89 to the SSC at that time, can the SSC claim that relief also in the updated return, or assuming he has missed to claim the relief under section 89 in the original return, whether that SSC can claim that relief under the updated return or not? We will discuss this later. So this language is very simple. Computation of tax in the updated return where no original or updated return was filed. So two situations has been covered. Number one, whether the return, original return or updated return has been filed or not. And the second is if it is filed. If it is not filed, then what would be the situation? And if it is filed, then what is the situation? Of course, in both the cases, if it is assuming it is filed, then you have paid the taxes under advance tax, self-assessment tax. There may be some interest or no interest under section 234 ABC. Whatever you have paid, that will be considered as paid for the purpose of 230 or 140 capital B. If you have not filed the return, so it may so happen that you have not paid the assessment, self-assessment tax, but other taxes like advance tax, TDS credit, or other credits which is available to you, 234 ABC, 234 AB you might have paid. So whatever you have paid, you will get the credit. What you have not paid, you will not get the credit, and that you have to pay subsequently. So, and the date has to be counted from the date in which it accrues or arises from the date up to the date in which you are paying, you are making the payment of that taxes. So computation of tax. Interest and computation of tax, interest and fees for updated return where no return has been filed. So just to segregate it, where a person has not filed the earlier return for the assessment year, for the relevant assessment year, the tax payable on the updated return, that is self-assessment tax, shall be paid along with the interest. As I mentioned, simple to understand. If you have not paid the tax at that time, now you need to pay those taxes. If you already paid the taxes, that is to be set off with your current liability. Further, an additional tax. What is additional tax? We will discuss. An additional income tax shall be paid before filing of an updated return. And such tax, interest, fees, and additional income tax shall be computed in the manner prescribed. So additional tax is very important term, and that 12 months or 12 months and 24 months, that is to be accordingly classified based on the additional income tax and how this is to be calculated. So coming to next point, so self-assessment tax on the income reported in the updated returns shall be computed after taking into account the following. So as I mentioned, whatever taxes you have paid, either it's advance tax, tax TDS, TCS, relief under section 89, foreign tax credit, MAT, AMT, all credit will be available to you. So here I have mentioned relief under section 89. Section 140 capital B, whether it covers the 140 capital B, whether this covers relief under section 89 or not, we will discuss. I have covered this in my poster also. Interest. This is interesting to how to calculate the interest for the late filing of return, because of course this is late filing of return. Earlier the due date of filing, assuming the case of individual, the last date for filing the return was an unaudited case. The return was last date filing the return was 31st July, but the SSC failed to file that return and of course failed to file the belated return also. Now he want to file the return and not paid tax at that time. Then how the interest should be calculated? At the time of furnishing of updated return, the interest under section 234A shall be computed on the self-assessment tax payable on the updated return. So this is very simple. Whatever tax I have calculated, I need to pay the interest from which date to what date we have discussed. That is accordingly has to be calculated. So here in block 2, I have mentioned for the period commencing from the date immediately following the due date for the filing of original return of the of the income and ending with the date on which the updated return is furnished. So date means any part of the month is considered as full month. So that is to be taken care of and the interest is to be calculated accordingly. The interest shall not be charged on the amount of additional income tax payable with updated return. So this tax is only on the tax amount and not on the additional income tax. (234C) interest under section 234C interest is computed with reference to tax due on the returned income. So the concept is similar what we did earlier also. So in the case of an updated return, the total income updated in the updated return is to be considered as returned income. So now since this is my returned income, so the interest under section 234C has to be calculated accordingly. Fee for default in furnishing of return shall be levied as per the provision of the furnishing of belated return. So that 1,000 or 5,000 as the case may be. So 234F would be applicable. So coming to next. So computation of tax interest fee under where the return was filed earlier. So if the assessee has filed the return, of course you have made all the calculation till the date of filing of return and you file the return accordingly. But subsequently you realize that some of my income has been underreported in the original return or in the revised return. Now you want to update that return. So whatever taxes, so calculate your tax liability since beginning. Whatever taxes you have paid, make the adjustment, due adjustment of that payment, and then for the remaining amount, calculate the tax liability accordingly. And whatever tax on the tax payable amount, whatever interest you have calculated under section 234B, C, A, calculate the total interest, whatever interest you have paid, just deduct that interest, and the interest is to be paid on the remaining amount. So remaining amount of interest under section 234 A, B, C is to be paid accordingly. So self-assessment tax. Self-assessment tax is basically at the time of filing of return what assessee calculate by own that this is my tax liability. That is self-assessment tax. So tax or relief, the credit of which has already been taken in the earlier return. In the earlier return means in the original return or the revised return or the belated return. Tax or relief, the credit on which has not been claimed. So assuming assessee missed to claim some credit, he can claim now also, but it should not result into refund. But he can claim that credit also which he failed to claim in the original or the earlier return. The amount of tax so computed shall be increased by the amount of refund, if any, issued in the. So if any refund has been granted to the assessee before the filing of this updated return, so that also needs to be taken care of, and the interest has to be calculated, and the self-assessment tax is to be calculated accordingly. (234B) is also important. But the mechanism is more or less similar, where a person has already filed the return of income, interest payable under section 234B, at the time of furnishing of updated return shall be computed on the amount of assessed tax. So this was up from the year 2023. This is the line would be from up to last year. The deleted part was also there, which is deleted from this Finance Act. So, or on the amount by which that advance tax paid falls short of the assessed tax, as the case may be. Does it make any difference or not? That needs to be tested. But the basic thing is whatever interest you have calculated, that is on the total amount, and then if any tax you have paid earlier, that is to be deducted, and on the remaining amount, the interest is to be calculated accordingly. The amount of interest computed shall be reduced by the amount of interest paid in an earlier return. So that is simple to understand. (234C) default in payment of advance tax. So interest under 234C shall be computed after taking into account the income furnished in the updated return as the returned income. So assuming you have filed a updated original return earlier or earlier return, and then subsequently you are updating your return. So whatever interest you have calculated till the date of filing of the return, for the financial year, I think that will remain same. And if due to change in amount, it will be changed accordingly. The amount of interest computed shall be reduced by the amount of interest paid in the earlier return. So if you see in 234A, 234B, or 234C, this concept is similar, that whatever you have paid earlier, that is to be reduced. A person shall not be required to pay the fee at the time of furnishing of data return if he has already paid the fees. So assuming you have filed the return, you have filed the belated return, that is before 31st December, and paid the fees of 5,000, that is 234F. Now you want to update the return. Since you have already paid the fees, you no need to pay that fees again. Hope this is clear to that extent. So payment of additional tax. So that 12 month and 24 month will trigger here the additional tax. We have already discussed what is additional tax. Whatever taxes you have paid or you have calculated in the earlier return, and any amount over and above is the additional tax. So the additional tax shall be equal to 25. So so is a tax. On that tax, you need to pay an additional tax. So additional tax shall be equal to 25% of the aggregate of the taxes and interest payable by a person on the filing of the updated return. This is important to understand. So assuming in the earlier return, you have calculated your tax liability, let's say 1 lakh, and you have paid your liability at that time. Subsequently, you want to update your return and you calculated your tax liability on the basis of updated information, that is 2 lakh rupees. Out of this, you have already paid 1 lakh. So 1 lakh is the additional, is the tax amount, the aggregate of tax, what you need to pay now. On that, 25% additional tax is to be embedded. If you are paying or furnishing the return before 12 months, and if you are filing the return after 12 months, but before 24 months, then that additional tax should be 50%. 50% of the aggregate of the tax and interest payable. So mind it, the interest is also part of tax at that time while calculating the additional tax. So 25% on the tax plus interest and 50% on the tax plus interest. After 24 months, you cannot even file that updated return. So all total less. So 3 assessment year can be filed in one go, assuming I'm in financial year. If I'm considering a situation where before March, then it can be happen that 3 financial year return can be filed at one point of time. So 1 is the current return, 2 is the updated return. Since we are in the month of April, and now the form is already notified, but the software is to be updated. So for the current year, yes, you can file the return for 22-23 financial year. You can file the return for last 2 years. That is 21-22 and 2021. 2021 now you cannot file because for the financial year 2020 for the assessment year 2021, the last yes, I think the last date is not yet over because it is 2 years from the end of the relevant assessment year. So 2021 is the financial year, 21-22 is the assessment year. So 23-24 to 24 it can be filed. So at any point of time you can test, depending upon the situation, 3 returns can be filed. So no reduction in the tax liability or increase in the refund. This was the core of this section, that if no return was filed prior to the updated return and the updated return is the first time return, then of course there is no question of reduction of income or the increase of refund because you have not filed the return. So there is no comparable at that time. So in that case, whatever you are declaring now is your amount of tax. Or you, on that amount, you need to pay the tax plus interest, you need to pay the additional tax. If you have filed a earlier return, that is 139,145, and you have not claimed any refund, and no refund was there, then in the updated return also no refund can be claimed. So there should not be any increase in refund. Assuming you did not claim any refund at that time, now you are updating the return, you want to reclaim the refund, not possible. If earlier return was filed and the refund was there, and now you want to claim the refund, but that should not increase the refund what you have claimed up. So in that case also, so then refund can be there and updated, but it should not be more than the refund in the earlier return. So whatever you have claimed earlier, that amount is either already given to you or not given to you, then you'll be eligible to get that amount. But in any case, it should not be more than what you have claimed in the earlier return. Any tax liability in the updated return can be more than or same as per the earlier return. So the last three bullets is applicable only when you have already filed the return under 139(145). The first bullet is cover the situation where you have not filed a return. So plain situation, if you have not filed a return, any amount you can claim now, but no refund, no loss. It should not be a case of refund. It should not be a case of loss. But you have filed the return earlier and claim loss. To that extent, you are eligible. Or if you want to increase the loss, you can increase. You can decrease the loss, but you cannot increase the loss, or you can not increase the refund amount. Can the updated return be revised? So as you know that for revision, there is a section under section 139(5), you can only revise the return. And 139, and for this, there is timeline to revise the return. That is up to 31st of December for the respective year. So that timeline is over. Then only the situation of filing an updated return will arise. Since updated return situation arises later subsequently, so you cannot revise the updated return. Or as you mentioned, as you discussed in the earlier part, that if you have filed the updated return one time, you cannot file the subsequent for the same year. You cannot file the updated return again. So no revision of updated return. Defective return. This is important to understand. So whether what is the situation if the defective return is there. So assuming you filed the original return and it become defective because of any reason, and you and the assessing officer given you the intimation or the notice for reply, and within 15 days you fail that dates also, and now the department has declared it as an invalid return, or you have not filed the return. So now a situation arises that since in the original return you have filed and you have claimed certain credits, or there was a refund, now it becomes invalid. Now you want to update the return under section 139(18). Can you claim the refund to that extent what you have filed in the original return or the earlier return? So the answer is no, because whatever return you have filed earlier, now it is not a valid return, or you consider that you have not filed a return. You are filing an updated return afresh, so you are not eligible to claim the refund in the fresh return. That is updated return. Hope this is clear. Whether updated return can also be a defective return? Yes, updated return, if you have filed a wrong return, or by any reason your updated return become defective return, then the procedure is same. The assessing officer will give you a timeline for filing of reply within 15 days, or some extended period, whatever. If the assessee has filed, make an application to the assessing officer, and the assessee has to submit that reply within the 15 days or within the extended time period, as the case may be. And if the assessee fails to submit any response in the prescribed time, then it will be considered as a defective return or as an invalid return. So the treatment would be same, and you will be considered as you have not filed the return. Okay. No updated return in the prosecution case. We have already discussed this, that if any prosecution has been initiated, no updated return can be filed. Now the question arises, when a prosecution is said to be initiated, assuming a notice of a show cause notice has been issued in the favor of in the name of SSE for the 2 under bracket 35, then can it be said that the prosecution has been initiated? So no, to that extent that prosecution has not been initiated. You at that time also, if you want, you can update the return. But if the notice for initiation of prosecution has been issued by the department, then you cannot file the updated return, or even if you file, it will not be considered as a valid return. So now come to the return part. 12AC is a rule which refers to ITRU, and ITRU is very simple to file. There are few information they ask for, and then the payment detail, and that's all. So for every SSC, either it's a company, individual, HUF, AOP, BOI, for all SSC, there is one form, that is ITRU. And ITRU is to contain some information that whether you have filed this return earlier, or whether you have filed the original return on under section 139, 145. If yes, then give the reference number. If not, then it is okay. Proceed further. Only 5 heads are there. You need to put the amount on that part. And then if any relief is there under section 89, then next part. And then the total amount, whatever the tax, then additional amount, and pay the period for whether you are filing this return within 12 months or 24 months. And based on this, it will calculate your 25 months or 25% or 50% accordingly. And based on this, you need to pay the tax. So after this, they will ask for the payment of tax column. So under section 140 capital B, you need to pay taxes. And for the other part also, if you have paid earlier, you can add those challans also there and update the return. So this is very simple to file. When it can be filed is very simple. If you're choosing the wrong head, incorrect income, blah blah. And how to sign. So this is as similar as the electronic by the electronic digital signature. So DSC, signing through DSC. If the SSC is liable to file the original return as with the DSC, so it will refer to the same. Now a few challenges what we want to highlight before you. So no question arises whether the non-resident can also file ITRU. So while reading the section, it says any person. So it means yes, a non-resident is also non-resident can also file ITRU. Now the question arises, in the original return, if you see, there are so many information like how many days you was there in the previous year, whether you are a resident, non-resident, either a resident and ordinary resident or a not ordinary resident. And based on this, so many calculations are pop up there and you feed all the information. But unfortunately, these informations are not in this form. So in that case, how the SSC will declare himself that yes, I am a non-resident or a resident. So that information is missing. Assuming I am a non-resident and I want to file and I want to update my return, where I put those information that yes, I am a non-resident. This column is absolutely missing. The second is how to declare the foreign asset. As you know that if the income is more than 50 lakh for in case of person and having foreign assets also, then FA column, FA clause, FA schedule, they have to furnish certain details. But these details are not there. Assuming I'm a person who is having foreign assets, I want to give the information to the department. Government has given me for filing of updated return. But these information, there is no scope for filing these information. How to declare the income of any other person accessible in the hands of the SSC. So assuming the section clearly says that the SSC, if the SSC is liable to file the return or by himself or in respect of any person, any other person. So of course the clubbing provision applies. But here in this case, the form does not contain any information. So assuming I want to declare some information which is accessible in my hand, but the tax has been deducted in some another person hand, and I want to take the credit of that TDS also. And for this purpose, I need to put the PAN number of that person. That information is not the provision for that is not made to put the information in this form. How to claim the tax credit if any other person is accessible. So I have covered in this. So how to carry forward the TDS credit. So assuming I have some TDS credit in the original year. Now I don't want to claim all the credit in this year, and I want to carry forward this credit in the subsequent year. I cannot do so because the information is the column for those information is not there. So I'm not able to put this information. But the fact is that the information is with me and I want to put this information. Otherwise, my return would be incorrect return or incomplete return. But unfortunately, I cannot furnish those information because you have not made the provision for filing those information to the SSC. Similar situation for the loss also. So assuming there is loss, I want to carry forward my loss. And how many years to carry forward? Assuming I failed to file the original return, now I want to carry forward those losses or file the earlier return also. Now I want to carry forward those losses which I have mentioned in the original return. Then also the information is not there. There are other situation also. Can the SSC file the nil return of income? So if you refer to section 139(8)(a), it says any person can file the return, but that return, if updated return, should be not a loss return. So assuming my loss is 1 lakh rupees, I cannot file the return. So there should be, but it never says that there should be always an income. So income or positive figure. So if the total amount of the total income or the net total taxable income is 0, can I file the updated returns? Technically speaking, yes, section does not debar for filing a nil return. And the question is how to pay the additional tax. That would be a challenge. But if you see also the form, if you're filing a nil return, it is taking, assuming you have 4 lakh income, that is below taxable income, then in that case also you can file the return. But and the system is also allowing. But my question is relevant to the zero income return. There is no positive, no negative. Only the zero income return. Can I file the zero income return? The section says yes, we can file the zero income return. If the SSC has filed the application under 119, can he opt for 139(8)(a)? So assuming I failed to file the return within the prescribed time, and I have made an application before the CBDT for under section 119 to allow me for filing the return. Now this provision has come up. Can I opt for this? However, in the one instance, my one proceeding or one application is pending before the CBDT. The section is silent in this case. The next issue is how to fill the details regarding audit under section 44AB. Assuming my case is auditable, but I failed to file the return at that time. Now I want to file the return. The question arises whether the books of accounts is auditable or not. If yes, whether it is being audited, on which date the audit report is furnished. This is all information they are asking in the original return or one revised return, but they are not asking this information in updated return. Then how the SSC can give the complete information to the department? 89A, relief under section 89. So if you see, the section is very important, and 140 capital B says only it is covering the situation where the relief is available under section 90 or relief is available under section 90A, or any tax credit has been paid. Any tax credit has been paid earlier. Any tax credit has been paid earlier, like 115J, JAAA or JD, or any taxes has been deducted like tax credit. But 89, for 89, 140 capital B is silent. So assuming SSC filed the return earlier, failed to claim 89, now he want to update his return. Can he claim 89? No. Answer is no, because section does not cover that situation. Can the SSC claim relief under 9090 if not claimed in the earlier return? If not claimed in the earlier return, under section 140 capital B says you can claim relief under section 90A, but in case of 89, you cannot claim that. And there may be other question also, because as I know that this what I have gathered or I have prepared, this is not the exhaustive list. There may be other situation where we need to test that whether this is covered under the ITRU or not. Amendment under section 140B was there, that is regarding 234B that we already discussed. So one case study, and then thank you. If any question is there, I am ready to take it, sir. Gaurav, sir.
Yes, sir. Sir, we have a few queries from our members. So the first query is that the assessee filed the return within the time and claimed refund of 50,000. Due to non-verification of return, it has become invalid return. What is the solution to claim refund now for assessment year 22-23?
Okay, so if it becomes an invalid return, it means it will be considered as you have not filed the return. You have not filed the return. So now you are filing return afresh. So consider that you are opting this 139(8)(a) situation in the first time and you have not filed the earlier return at any point of time. So in that case, it should not be a refund return. So if it is a refund return, you will not be eligible to get this. So refund return is not possible.
Yes, sir. Sir, second question is, can we file an updated return for disclosing exempt income under section 10? Is it necessary for updated return to show additional income?
So this is very important question what I wanted to highlight in my poses. That assuming I'm a foreign resident and there is an interest income of let's say 10 lakh rupees from the NRE account, which you all know that it is exempt under section 10 under bracket 4B. Now the question arises, am I supposed to file the return of the question is the section says if the total income exceeds. So whether it's a total income, so if it is not forming, so exempt income is not forming part of total income. So in that case, you are not liable to file the return. But if you want to file the return and you want to claim the exemption in the updated return, it is not possible to claim the exemption in the because the column which is said you calculate that part and then bring the total the net figure, and you cannot mention those exemption in the return itself.
Okay, sir. Sir, another query is if earlier no ITR was filed, updated return can be filed for refund of excess TDS even after adjusting tax liability in ITRV.
So considering this question, assuming you have not filed the return earlier, right, sir? You have not filed the return earlier.
Yes, not filed.
Not filed the return. Now,
yes.
Now after 2 years, you realize, or after 1 year, you realize that there is a refund or credit tax credit which is available to you. And if you file the return at that time, you will be eligible to get the refund. Right?
Okay,
but
sir.
if you want to file updated return now, because all the timeline has been crossed, now you want to file the updated return, you are not eligible to take any refund. If not filed, no refund. If filed earlier, to the extent what you have claimed in the earlier return, it is available to you. More than that, it is not available. Simple.
Okay, sir. So next query is, can we claim TCS for updated return filed under 139(8)(a) if we fail to file original return?
Yes, if you fail to file in that time, you can claim this, but it should not result into a refund.
Okay, sir. Sir, another query is, can we apply for relief under 119(2)(b)?
So this is another aspect. So assuming you failed to file the return within the prescribed time, now you have one shelter that you can file application to the concerned authority or the CBDT under section 119(2)(b) that I have missed this bus. Please allow me to file the return. Now you have one option which is available to you, that is 139(8)(a). Now you have to choose that whether you have made this application earlier and now you want to forgo that application. Okay, leave it because you don't know whether when the reward will come from the CBDT. So in the meanwhile, let's file 139(8)(a). So can you do so? To my mind, yes, you can do so. The section is not saying anything that while talking about the barring the filing of this return, they are not covered if any application is made under this regard under 119(2)(b). So to my mind, yes, you can file 139(8)(a).
Okay, sir. Sir, another query, if a assessee has filed return with refund of 1 lakh under section 139(1) and refund is yet to be received. Now assessee wants to update the return resulting in refund is brought down to
Hello?
25,000. How to file? Hello?
Okay. So sorry, there's some network issue, so I can't get your point.
Sir, if assessee has filed returned with refund of 1 lakh under section 139(1) and refund is yet to be received. Now assessee wants to update the return resulting in refund to be brought down to 25,000.
Okay.
How to file this updated return?
So you want to reduce the refund amount?
Yes.
Most welcome, sir. Most welcome. Department is waiting for you. Please file updated return and department will be very happy that you have reduced the refund amount.
And sir, if he has received the refund of 1 lakh and he now wants to file the updated return,
yes,
he
can file, but whatever you have received, he has to include that as tax payment because he has already received. So then he has to include.
Okay, sir. Whether one can withdraw the deduction claimed under Chapter 6A by filing updated return.
Okay. So this is very important question that I have tax credit available to me, but now because if I claim that tax credit, then I won't be able to file updated return. Then in that case, what we are doing, that we are foregoing that tax credit. Okay, forego it, just file the return, so that we should not be considered a non-filer of return. Because if you become a non-filer of return, the consequence is that 260 a non-filer of return, then 206AB would be applicable. 206AB would be applicable in that case, and in that case, the TDS amount would be double in some cases.
Okay, sir. Sir, one another query is, in case the original income tax return with refund is not filed, can the assessee file updated return?
Yes, updated return assessee can file, but since they have not claimed any refund in the earlier return, they cannot claim any refund in the updated return also.
Okay, sir. So, sir, these are the only queries which we have as of now.
Thank you so much, sir. So, and thank you to all
for
the
enlightening us on various. Thank you, sir, for enlightening us on various provisions and conditions related to filing of updated return under 139(8)(a) of IT Act in such a nice manner. Thank you, sir.
Thank you so much, sir. Thank you, Gaurav-ji. Thank you to my co-speaker, Bhavesh-ji.
Sir, it was a great session so far as I was able to listen, and the PPT was also nicely presented. It's an honor, sir, to be your co-speaker.
Thank you so much, sir. And thank you to all the participants for patiently listening. Thank you, sir.
Thank you, sir.
Thank you.
We have amongst us our second speaker, CA Bhavesh Mittalji from Raipur, who will update us on various amnesties announced by government under 49 GST meet. So CA Bhavesh Mittalji is an indirect leading professional based in Raipur. He has core specialization in heavy manufacturing industry and has handled indirect tax aspects of various integrated manufacturing plants and associated service industries. He has critical experience of 4+ years at Delhi NCR, where he has involved multiple clients in industrial giants on their GST implementation and highly complicated indirect tax issues. He has also represented them over various forums. He has also addressed more than 100 seminars, webinars on indirect tax across various educational, trade, and professional bodies. He has authored the book GST Made Simple and has regularly contributed articles over various online forums. He is also a faculty at NACIN, Faridabad, Raipur, and is involved in training of multiple GST officers of Central Region. So without taking much time, I now hand over the charge of the session to CA Bhavesh Mittalji. Welcome, sir.
Thank you, Gaurav, sir. Thank you, Sachin Sinha, sir, my learned co-speaker. And thank you, this CP committee, Chairman, sir, Vice Chairman, Gyan, sir, and everybody on the panel involved in making this session a great success. And I see 500 participants joining, and this is a huge success, I should say. So without taking much of the time of all the audience, I would like to start with the session. I'll take 45 minutes dot for completing my slides. And so the broad coverage of today's session would be amnesties, which were announced by the 49th GST Council meeting, which has already been notified under the Act. Already the notification has been issued by the CBIC for notifying those amnesty scheme, which may or may not related to some returns that may pertain to annual return, monthly 1 and 3B return, that I'll tell, and the timeline for getting benefits of that amnesty scheme we will discuss one by one. After that, we will go to the Finance Act amendments, which are not yet made effective. Please note, dear audience, the Finance Act 2023, all the provisions have been made effective. However, the provisions related to indirect tax and specifically GST and customs are yet to be notified by the government. So the Finance Act specifically mentioned that although Finance Act has come into picture, but the provisions related to GST, indirect taxes, and other customs related areas, the notifications will come as decided by the CBIC at later stage. For customs, there are already some notifications which are on float, like for example, ECL issue you people might be facing, your clients might be facing, electronic credit ledger, cash ledger issue in the customs. So that is already a reality now, which was proposed in the finance bill, notified immediately after the budget, although it was deferred. However, the issues related to indirect tax, particularly GST, have been deferred to a future date. So we'll discuss that one by one. So let us start. First, the amnesty for waiving late fees of annual return. So we are very well aware that pending GSTR9 was a big trauma. GSTR9 जितने भी pending थे financial year 17, 18, 18, 19, 19, 20, 20, 21. So for all those financial year, it was a trauma. Clients were end up paying 4 lakhs, 5 lakhs, 6 lakhs, 7 lakh as late fees different times. Even few clients of mine also, they paid late fee, and now there is an amnesty which is coming into picture. Now they have said for all the pending GSTR9 without any condition. Please note, audience, please note, learned members, all the pending GSTR9, irrespective of the turnover, if we are filing within 1/4/2023 to 30th June 2023, the late fees would be capped at rupees 20,000 CGST and SGST combined, that is 10,000 rupees per act. So if the fees is less than 20,000, that is 10,000 something, then 10,000, or if the fees is 5,000, then 5,000. If it is 3 lakh, 4 lakh something, then maximum capping is 20,000 combined for both the act. However, the condition is that the return should be filed within 1/4/23 to 30th June 2023. So this is the time limit, and it is one-time opportunity for all the taxpayer. Now late fee for 9. Now this what I have told is for financial year 17, 18, 18, 19, 19, 20, 20, 21 and 21, 22. For 22, 23 and onwards, the late fee is not removed, not waived. It has been reduced in a staggered manner. For example, if the turnover is up to 5 crore, then the late fee would be rupees 50 per day. It was 200 rupees per day. It would be 50 per day, maximum up to 0.04% combined CG and ST SGST. That is 0.02% combined of the turnover for the financial year 22-23 and onwards. Similarly, if the turnover is more than 5 crore but less than 20 crore, the fees is 100 or 0.04% of the turnover combined. So why the fees is 100? For example, 50 will become 100, but 0.4 will remain as it is, because if the turnover is more, 0.04% will be more, obviously. So if the turnover is more than 20 CR, so there is a no change. 200 rupees per day, or 0.25 or 0.5% of the turnover combined is the late fee for GSTR9 late filing. That is maximum late fee, 200 rupees per day, which can go maximum up to 0.5% of the turnover combined. So GSTR10, as we know, it's a final return, and final return, if we are filing, guys, please listen, GSTR9 for the financial year 17, 18, 18, 19, 19, 20, 20, 21 and 21, 22. The late fees is maximum 20,000 irrespective of turnover. After 2022, 2023 and onwards, 2020, 22 and 23 and onwards, the late fee is 50, 100 and 200 depending upon the turnover, 5, 10 and 20. I hope I am clear. So now GSTR10, that is a final return, irrespective of everything. If the pending GSTR10, irrespective of turnover, filing period, delay, etc., if the pendencies are done away with within 1/4/2022, 1st April 2023 to 30th June 2023, सो ये 3 महीने के पीरियड के बीच में अगर ये पेंडेंसीज को टेक केयर किया जाता है तो मैक्सिमम लेट फी आपकी 1000 रुपीज लगेगी. आई होप आई एम क्लियर. GSTR4, दैट इज फॉर कॉम्पोजिशन. अगर पेंडिंग GSTR4 1/4/23 से लेके 30 जून 2023, 1/4/2023 से लेके 30 जून 2023 तक फाइल होते हैं, इन दैट केस मैक्सिमम लेट फी जो है वो 500 रुपए है combined. That is combined for CGST and SGST both. And if the GSTR4 is nil, then zero late fee. But for 9, if it is nil, the late fee will remain as it is. For 10, if it is nil, even if it is nil, the late fee will remain 1000 rupees. But here, since GSTR4 is nil, it is 0. Now, the main problem, I think Gaurav sir, who is the honorable moderator today, will agree with me, that many people end up paying late fees, huge late fee of GSTR 99C 13B, and finally the government comes out with some amnesty scheme like this, and finally the end loser are those people who are actually compliant. Those people who did not comply, even did not bothered about the late fee, are now doing balle balle kind of thing. So because they are privileged as compared to those who complied. So for example, one of my client, they paid huge late fees, and even just before 20-30 days of amnesty scheme, they paid the late fees. So in fact, there was no rumor also that such an amnesty will come, although there was a lot of representation. But if such amnesties are coming, the government should look at refunding the late fee which has been paid by various classes of taxpayers. If such injustice or lack of equity is being prevailed, then certainly this law will become a mess. So equity should prevail. There are many court judgments which say equity should be focused. So this, by doing this, we are not focusing on equity. One taxpayer is being given advantage. One taxpayer who is compliant is cut down to a disadvantageous position. So these are some issues. So similarly, some amnesties came for cancelled GST. Sir, since 2017, when GST law came, for a time and then there has been issues of cancelled GST, and maybe for non-filing of GST returns, maybe for any other reason, pending demands, whatever, non-generation of e-way bill, all those things, many reasons they cancelled the GST. Now the cancellation becomes such a problem that the people were not able to apply for revocation within the specified time, that was 30 days. So this pile up, the issues got piled up, and just like garbage dumps in Delhi, which are currently the peak news of the country, similarly the cases of cancelled GST got piled up, and it was piling like anything for every state. So there were many high court judgment for restoring the cancelled registration, and accordingly department was taking the action on the basis of high court. But for those people who were not able to go to high court, an amnesty scheme was needed, and accordingly here an amnesty scheme is into the picture. The amnesty scheme says that if at all, due to non-filing of GST return and due to non-filing of revocation application on time, if your GSTN was cancelled and it remained cancelled, then now you can file such application by 30th June. See, for every time limit, the sunset date is 30th June 2023, and it is a one-time opportunity. So if you will file application, then certainly your registration will get registration cancellation will be revoked. Certainly you have to pay the tax, late fee, interest, whatever it is pending. So for example, non-filing of returns, your last 7-month returns were not filed. So late fee already in the notification is there into picture. Now late fee has been reduced to a certain amount, 20,000 for 9, or 1 and 3B late fee has also been reduced. So since the late fee has been, just a second, see, there is no late fee reduction for 1 and 3B. I'll take my words back. So since the late fee has been reduced for 9 and 1 3B, if you file with late fee and interest and taxation, then certainly your registration will cancellation will be revoked, and accordingly your registration will become active. So, and you can make the transactions from then and there. But please note, it is a one-time opportunity which is available by on or before 30th June 2023. For future, what they have done? For future, they have thought to increase the time limit to 90 days and 180 days with commissioner approval from existing 30 days. See, for example, if my registration is cancelled due to non-filing of returns, I'm not filing the returns since last 7 months. Certainly, there is high possibility that within 30 days, I will not at all come to know also that my registration is cancelled, because I'm not bothered. I'm not filing my returns at all. So now they have increased the time limit to 90 days, and with commissioner approval, 180 days extended period they have provided for revocation of cancellation. Similarly, there were certain cases in our country where non-filers, for example, if I am not filing my GST return for last 6 months or 3 months in case of composition, 3 quarters in case of composition, my registration was ex parte cancelled by the department. An ex parte order was passed. What sort of ex parte order? That this much is my liability on the basis of data available in 26 AS or blah blah, whatever information is available with them. They passed ex parte order. Ex parte means they did not bother to listen me, or no natural justice was given to me. Ex parte order was passed, Now, such ex partes issues were also piled up. So it was also like a garbage dump. It was continuously getting piled up, and a lot of high courts gave order that such ex parte order needs to be set aside. Already there are settled jurisprudences under the law that even though ex parte order is being issued by the department due to certain circumstances which allow them to do so, then also they have to consider the benefits which are available under the law. For example, if at all I have not filed my GST returns and my 26 AS is showing 500 crore turnover, it is not that department will simply create a demand of 18% on 500 CR. Rather, they will give the benefit of input tax credit and the net amount only could be demanded with me. These are the settled principle by Honorable Supreme Court and High Courts. But this did not happen under the GST and issues were piling up. So the matter reached to the GST Council, and for all the past cases, irrespective of any condition, irrespective of fact that appeal has been filed or not. For example, if I have filed my appeal against the cancellation order, then also that irrespective of me filing of an appeal, they have given an amnesty that if I file my return with my self-assessment and late fees up to 30th June 2023, then my ex parte order will automatically lapse. So even if my matter is pending before the commissioner appeal or at higher level or at lower level, whatever it is, wherever it is, as is, where is basis, that ex parte order in itself will become null and void and my case will become closed. And if but however, I have to file my return along with interest and late fees up to 30th June 2023, then only it is possible. So again, those who went to the High Court spent a lot of money getting the order, and those who took various other action were under the back foot, and now the amnesty is available to those people who were the most non-compliant. So these were the amnesties, so-called amnesties under the GST regime. A food for thought. People can reply over the comment that whether as a chartered accountant should I support amnesty scheme or not. So this is one question for the forum to open answer it. Whether as a chartered accountant, what is my duty? Whether my duty is to shout or represent to the government for amnesty, or to enable the clients or industry to take requisite action within time. So what is our role? I am not giving any view. It is our independent judgment, and view could be different. So this is one food for thought which is open for the forum. So as I initially told that Finance Act has also brought certain changes which are very, very, very important. But as a matter of fact, the changes related to some customs related provision and some GST related provisions, some custom related provisions were only made effective. The Finance Act, when it says Finance Act 2023 has been passed, it has got the precedent assent. Then also, it is quite clear that all the provisions of the Finance Act would have become effective. However, the initial section, that is short title, extent and commencement, specifically mentioned that unless otherwise it is notified by the board, these particular sections which pertain to customs and GST and IGST, etc., will not become effective, will not at all become effective. So some notifications with respect to customs were already into picture, like ECL, electronic cash ledger in customs, which has created a lot of issue and they have extended the notification date. However, GST provisions are yet to become effective. But as a professional, it is implicit to beforehand analyze the same so that any future implication could be looked at and relaxed. So the first bill, the finance bill, sorry, we can read it as act. I was not able to change it. The finance bill 2023 has proposed the following amendments. So they're saying the word goods or shall be omitted under 10(2)(d) and 10(2)(a). What does it means? So basically, under the composition scheme, a taxpayer was not allowed to supply the goods through electronic commerce operator. The composition taxpayer was not allowed to make supply of goods through an electronic commerce operator, because under the composition act, under the composition scheme, under section 10(2)(d) and 10(2)(a)(c), there was a specific restriction that a composition dealer cannot supply goods or services through electronic commerce operator. So for example, if I'm a composition person and I want to sell something on Flipkart or Amazon, I was debarred. debarred because the law did not permitted me, and it was all done to discourage the composition scheme among the classes of taxpayers. So now they have enabled the supply of goods through electronic commerce operator, and that is a very important and good news. But again, this has not become effective. The notification is awaited still. Now, one more important point, that services supplies through electronic commerce operator is again still pending for composition dealers. So one may wonder that a composition scheme, it's a goods based scheme. So supply of service is not a question. So guys, please note the supply of under the GST law. I understand that composition scheme was a VAT based scheme. However, under the GST law, it has been specifically provided that after various amendments, GST Amendment Bill, GST Amendment Act 2018, which was effective from 1st February 19, the composition people were allowed to make supply of services up to a certain percentage, and also a special scheme up to the 50 lakh turnover was announced under section 10(2)(a) for certain classes of composite taxpayers, and there the power was given to supply services at the rate of 6%. You people might remember that 6% rate was announced, and composition scheme was allowed on services also. So this condition has not been relaxed for supply of services. Only goods condition has been relaxed so far as now. I hope this amendment is quite clear. One may again question that the question may come that whether composition dealer is allowed to make interstate supply. The answer is big no, because composition dealer can never make an interstate supply. It is not allowed per se under the law. And even though e-commerce operator through e-commerce operator it is supplying, interstate supply is not allowed. But this notification is yet to come, yet to made effective. This is something what I am repeating. So section 23, which says persons not liable for registration. So under the law, there was a specific power under section 23 that no registration would be required in case you are an agriculturist to the extent of agriculture produce, or you are engaged exclusively in supplying those services which are exempted under the law, or exclusive, mark the word exclusive, or you are exclusively supplying those services or goods which are taxable under the reverse charge. So for example, if I am a GTA, I am supplying any service, my whole exclusive turnover is taxed under reverse charge because I have not opted for forward charge, then I need not take any GST registration. However, if I am making an interstate supply, for example, a GTA can make interstate supply, there is high possibility that if I am a GTA, goods transport operator, registered in the state of Haryana, I may make a supply to a person located in Chhattisgarh. So it is an interstate supply, place of supply in other state. So once I was making an interstate supply, my exemption for registration was taken away with. Under the GST Act, the registration requirement is such that if your turnover exceeds 20 lakh or 40 lakh in case of goods, then your registration is mandatory. Your registration is also mandatory even if you are making a single rupee interstate supply, and if you are wholly exempt or your services are wholly taxable under the reverse charge, then no registration is required. Now, the question was that the mandatory registration provision, which tells that in case of interstate supply of even a single rupee, you have to take registration, was overlapping the provision with respect to section 23, which was giving the exemption from taking registration. I hope I'm clear. So section 23 was allowing me the relaxation for not taking the registration. Similarly, section 24 was casting a mandate on me that you have done a single rupee interstate supply, you have to take registration. So here what happened, there was a deadlock in the law. So now they have made a retrospective amendment. They overrided both the section. They said, yes, if any person is providing exclusively reverse charge services, then even though section 424 mandatorily provides, then also registration is not required. So it is a welcome amendment. However, notification is yet to be issued. Some important amendment what Finance Act proposes is they have come out with a methodology of time limit. Currently, there is no time limit. For example, GSTR1, you can file till infinity if you have missed filing for any period. It is just that for next period, it won't allow unless you file the previous period. So for example, GSTR1 for the month of April, you may not be able to access unless you file GSTR1 for the month of March. Similarly for 3B. Now they have come out with some innovative idea that they will disallow GSTR1 after the expiry of 3 years period from the due date of furnishing the state details. For example, April GSTR1 will file in May 11th, May 2023. So after 11th May, for example, if I have missed GSTR1 filing as on 11th May, then 24, 25, 26, after 11th May 2026, I will not be allowed to furnish my GSTR1. I hope I am clear. Similarly, for 3B, the date will be 20th of next month. 9(9)(c), they have said 3 years from the due date of expiry of said annual return. So, for example, 22-23, the due date is 31st 12/2023. So, after 24, 25, 26, I may not be allowed to file my 9(9)(c). So, what will happen, sir? So, due date will elapsed, late fee again will be becoming bulgy, and late fee will keep on coming because my 9C will not be filed, and late fee will be capped maximum up to 0.25% of the turnover, 0.50% of the turnover in case the turnover is up to 20 more than 20 crore. More than 20 crore, sir, 5, 10, 20, this bifurcation is only for one time MNST. Is it right? No, the bifurcation is done for all future periods. So for example, if my turnover is less than 5 crore, 50 rupees per day, up to 10 crore, 100 rupees per day, more than 10 crore, it is 200 rupees per day. So no relaxation. And up to 0.50% of the turnover, this MNST, this reduction late fee will apply till the capping of turnover percentage. Similarly, they have told that GST rate, the operator will not be allowed to furnish after 3 years of the due date. Some amendment under section 16. This is something important. Just allow me 1 minute. So under section 17, section 17. So section 17(5). Another important amendment which is proposed, or I should say the Finance Act has already notified, which is yet to get just authority from the board, is 17(5)(fa). Sir, GST law was implemented in India with a dream of seamless flow of input tax credit. As the time elapsed, we have now understood that the ITC is not my right, and all those judgments of what KK Industries, Quest Merchandise Private Limited, Eicher Motors, everything, they are trying to overrule. In fact, Quest Merchandise, KK Industries, Jayam and Company, wherever it was said that ITC is my right, they are now trying to overrule this preposition, and time and now they are making continuous changes. For example, earlier the condition of 2B was not there, 2A was not there. They implemented 36(4). They gave legal backing to 36(4). 2B was implemented. 2010 5% cushion was allowed. Now the cushion has been removed. Whatever will come in 2B, that only credit would be allowed. So motor vehicle insurance, repair, maintenance, immovable property, civil construction, many restrictions. So there is no seamless flow of credit in many areas. So adding on to those areas, there is one more important amendment which is about to come, is the CSR activity. For example, as per the income tax that my co-speaker sir would better know, as per the Companies Act, 2% of the net profit are required, are mandated. See, mark my words, what I'm saying is 2% of the CSR is mandatory for a company to function. It is a mandatory compliance under the Companies Act, and that CSR part is not allowed under the Income Tax Act as an expense, because it is the corporate social responsibility, not an expense of the government, so that they did not give any tax benefit onto it. So before this amendment, in fact, today, as on today, the position is such that if I am a taxable company registered under the GST law and I am making 2% expense for my CSR, so I can give multiple examples. For example, if I constructed a toilet for a school, So it is a civil construction. It is otherwise also not allowed under the GST law. So no question of discussing this amendment as far as civil construction. Suppose if I distributed some gifts. So 17(5)(h) specifically talks about gifts. Gifts lost, destroyed, written off, disposed of by way of gift or free samples. So gift also the credit is not at all allowed. So no sense in discussing that part. However, there were certain CSR expenditure which were related to my business, Farfetched, which were not blocked under the gift or any civil construction concept. There, the people were taking the input tax credit. For example, if I spent something on some people, if I installed some kind of plant and machinery to some premises, or if I created one school of mine and I run that school on CSR. So all those CSR expenses, I purchased bus for school, and so that CSR credit many people were taking because it was not a gift, because the bus always belongs to me. And CSR, there was no civil construction or any other blockage. So people were taking the credit, taking a view that CSR is mandated under the Income Tax Act. And if I did not do, my compliance under the Companies Act will get defeated, and accordingly there will be a problem, penal implication on my business. And since the GST Act under Section 16 says that anything in the course of furtherance of business is allowed under the as a credit, the credit would be admissible. But the department was consistently telling that no, CSR credit will not get benefit under the GST law, and the credit for CSR is not allowed because government is saying that any expense which belongs to you should be incurred by you but not by the government. Simple concept. So they have now come out with a section 17(5)(fa), which says goods or services or both received by a taxable person which are used or intended to be used for activities related to his obligation under the corporate social responsibility referred under 135 of the Companies Act. So for example, they have now created a blockage that any mandatory CSR, again I mark my words, mandatory CSR, the credit would not be allowed for any sort of goods and services, even though they have been specifically blocked or not. So for the bus which I was able to take the credit, I may not be able to take credit once this amendment becomes effective. However, there is another side of the coin too. I can very well say that till the amendment becomes effective, till the amendment comes into picture fully, guys, please listen. It is now settled that the credit on CSR, which are not blocked elsewhere, could be very well availed, because this amendment has been brought to block CSR expenditure input tax credit. However, before the blockage comes into picture, the credit could very well be taken. So wherever the department is questioning the credit pertaining to 17, 18, 18, 19, 19, 20, 20, 21, and 22, 23, so you can easily say that department that if the credit was blocked earlier, then why there was a need of any amendment? So this concept we can take, and the judgment SL Propec versus Commissioner Sestet Mumbai will help you for taking your grounds on a more structured manner. So this is related to CSR activity. However, one more important food for thought for members. This blockage has been done for the future period for mandatory CSR. What about those CSR which are not mandatory? For example, law says me minimum 2% contribution should be done. But as a person, as a company, I can do 5% contribution. Whether additional 3% disallowance would be allowed on additional 3% CSR done by me. The law says obligation under the CSR, and my obligation is limited to 2%. So this is one view I am giving for thought for the members, and accordingly the decision could be taken. I hope I am clear. So certain activities are there which have been notified with a retrospective effect that, for example, high C sale. If the goods, I have imported some goods and before its clearance I have sold to some third party, and that third party is getting its final clearance under the customs law. Similarly, there was a case of high C sale in bond transfer. If I file the bonded warehouse bill, in bond bill of entry, and under the bonded warehouse I sell to some third party, and the third party itself is taking the clearance, then no GST would be applicable. It was under the Schedule 3 brought by Finance GST Amendment Act, now given the retrospective effect from 1/7/2017. However, there was a clarity that no reversal with relation to those credit would be affected. For example, if I have imported some goods and I'm transferring the document of title, since I have not availed the credit, I have not paid the GST, there will be no reversal requirement. However, in case of bond transfer, wherever I have stored the goods on a bonded warehouse, there would be certain expenditure like rent of that bonded warehouse, the other services, CHA fees, consultant fees, etc., etc. So the reversal, although the law was clear that reversal would not be required, the revenue was becoming at the revenue was coming at a loss, since in case of bond to bond transfer there were certain expenditure which was not there in case of IC sale. IC sale only there was a mere document title transfer and all responsibility lied with the ultimate importer. However, in case of bond to bond, there were certain expenditure on GST on which GST was claimed by the taxpayers. So department said that, oh yeah, please stop. Department said that from a date to be notified, here what we will do, for in case of bond to bond transfer, we will not exclude it from the definition of exempted supply for proportionate reversal. Not exclude, not exclude means it is included. So bond to bond transfer, if you are doing, you have to consider it as an exempted turnover for computing your common ITC reversal. Sir, since the inception of GST law, these e-commerce operators were very happy because they do what they wanted to do and no penalty, etc. were being attracted. So now what the law has come up with, although it has not been notified again, they are saying that certain supply of goods or services by an unregistered person. For example, I am not registered under the GST law and I am supplying some goods and services through Flipkart or Amazon. Up to 20 lakh turnover it is allowed. And if I have supplied some goods or services through Flipkart and Amazon, then the responsibility allows any electronic commerce operator who allows a supply of goods or services to go through it by an unregistered person other than a person exempted from registration by notification, other than obviously those who are exempted, shall be liable to a penalty of 10,000 or an amount equivalent to tax involved. As if such supply has been made by a registered person other than paying tax under section 10, whichever is higher. So for example, if I'm an unregistered person, I'm supplying certain goods to through e-commerce operator, and it comes into the knowledge of the department, then that e-commerce operator would be liable to pay 10,000 or amount equivalent to the tax involved. Please mind, it is tax involved, not tax evaded. Not tax evaded. Here it is not a question of tax evasion. Here it is a question of tax involved, because an unregistered person is not allowed to supply goods through e-commerce operator. Once he is supplying means he is mandatory required to take the registration under section 24. Once section 24 is attracted, GST is due. Once GST is due, who will pay? Unregistered person will say, sir, I am not registered, why will pay? So here 122 1B has been inserted to ensure that penalty or amount equivalent to tax involved, either it is paid by the registered person or amount tax involved, had such supply been made by a registered person, has to be paid by the electronic commerce operator. So wherever unregistered person has been allowed to make supplies through it, in terms of a specific exemption from taking registration, these provisions has been enabled. Similarly, if I'm a person, I was not allowed to make interstate supply. For example, composition person, and even though I am not allowed, I am making an interstate supply, then also penalty would be imposed on me. Similarly, if I have a requirement to submit some information return under section 52(4), that is TCS, then also if I am not submitting, I am required to pay a penalty which may be equivalent to tax involved. So decriminalized, suppose if the GST officer is coming and I'm obstructing or preventing officer to discharge his duties, or I'm tempering the material evidence, I'm not supplying the information. Earlier jail provisions were there for these offenses also. Now it has been decriminalized. You would have read newspapers that decriminalization of GST Act, only these 3 offenses has been decriminalized: fake invoicing, abetting, taking fake invoicing, making fake supplies, certain sort of invoicing without supply without invoicing. All such scenario has not been decriminalized. The minimum threshold has been increased to 2 crore from existing 1 crore, except for fake invoicing cases in case of prosecution. Earlier prosecution was done on the basis of if the tax involved is more than 1 crore, now it has been increased to 2 crore. However, in case of fake invoicing, the issue remains same. So, and majority cases in India are of fake invoicing only. So now GST portal, where we are submitting various data. Now GST portal can supply your 1, 3B and 9 to various department various government department in the manner and condition as may be prescribed by the board. So your GST data, which includes your sales as well as your expenses, will be supplied to any other person as will be notified by the board. And now authorities will have your P&L before you give them, because all your purchases, whether it is revenue nature, capital nature, everything would be available with them. So now the time will change, and there will be no or very less scope of things to be in the control of a chartered accountant or any other person. So because everything is now available with the department, and they have enabled the provision of supplying to any other person also. This I have already covered, that supply of warehouse goods from bonded warehouse and non-taxable territory to non-taxable territory, retrospectively they have exempted. Now the last provision, that place of supply, this also has not been notified. No amendment of Finance Act which I have discussed has been notified yet. But I'll take a case, I'll take a scenario. For example, from Raipur, that is my town, I am supplying some goods out of India. So current Chhattisgarh is steel hub, and from here we are exporting steel to any other country, say Australia, and we are supplying Australia steel. So the contract is a CIF contract, and I'm telling the transporter that it is my responsibility to get the goods delivered to Australian guy. So I have booked the transporter. Earlier, in case of goods transport outside India, the place of supply was deemed outside India. For example, in case of Australia case, the place of supply was Australia, that is destination of goods. Now they have removed such anomaly. They have told that in case a registered person is taking your service, for example, if I'm a registered person in Raipur and I'm taking service of that DTDC or any other freight forwarder, any other logistic service provider, then in case I am a registered person, my location would be the place of supply. In case I am an unregistered person, goods where the goods handed over for transportation. So here now the service provider, logistic service provider, will put my place, Raipur as a place, Chhattisgarh as a place of supply, and charge GST accordingly, and credit would be available to me. Even though earlier the circular was issued by the department that even though the place of supply is outside India, the credit would be available because there is no direct linkage of POS provisions with the GST credit. However, there were practical challenges. So taking care of those things, now they have considered and amended the provision that now place of supply would be the state where the registered person is there. And if the person is unregistered, goods handed over for transportation. And with this, some settlement of states, for example, earlier the revenue was going to central government. Now the revenue will be distributed to that state where a registered person is located and actually consuming the goods. So this has been done as per that provision. So I hope these were the amnesty scheme. Any question, whether or not related to this amnesty scheme, any other question, I am very, very happy to take it. Over to Gaurav, sir.
Yes, sir. Sir, we have one question.
Yes, sir.
Is that this amnesty is only for the late fees or for interest also?
No, sir. Sir, currently the amnesty is only for late fee. For interest, there is no amnesty. After COVID time, where the interest was reduced, there has been no amnesty for any interest sort of thing. So interest needs to be paid.
Okay, sir. So another question is whether this amnesty is for GSTR 1 or not.
Sir, no amnesty has been notified for 1 and 3B, sir.
Okay, sir.
Yeah.
So I think there is no other query from our
Sir,
member.
Either I was very clear or I was not clear at all.
So just a minute. Sir, one more query.
Sir, sorry to take just one thing, sir. I failed to mention one important thing. Now the department has increased the time limit for issuance of show cause notice under section 73. Under the GST law, there are two sections, that is section 73 and one is section 74. So under section 73, the cases other than fraud suppression was there, and in cases other 74, it was fraud suppression cases. Under section 73, the time limit for 17-18 cases was 30th June, which has now been increased till 31st December 2023. for financial year 18-19 March 2024 and for 19-20 June 2024. So they have increased the time limit under section 73. So the power has been given, and this year there will be blunder of show cause notices from the department side. With due respect to department people whomsoever have joined. Go, Gaurav sir.
So there is one more query. They want one clarification on the first limb of amendment in section 122(1)(b), ECO penalties. The member wants the clarity in this again, this first
So
limb of
for
amendment.
example, sir, if I am an ECO, electronic commerce operator, hello.
Yes, sir.
If I am an electronic commerce operator and I'm supplying goods related to unregistered person, so unregistered persons are not allowed to make supplies through ECO. If any such cases happen, then penalty would be applicable to the ECO and not to that unregistered person.
Okay, sir.
Yeah.
So we have only these queries as of now. So thank you,
Great,
sir,
sir.
for yes, sir. So thank you, sir, for updating us on various amnesties related to rationalization of late fees in filing of GST return and revocation of GST registration and various amendments related to e-commerce operators.
Thank you
So
so
with
much,
this,
sir.
Thank you, sir. With this, I also thank our members for active participation in this webinar in such a large number. I am also thankful to CP committee for organizing this webinar, for updating our members' knowledge on topic related to filing of updated return under this IT Act, and also for updating our members on various amnesties announced under GST Act. Thank you, everyone.
Thank you.
Thank you, sir.
Thank you, everyone. Thank you.